They're too quick to start laying people off and getting rid of people in order to be as profitable as possible. So, so this is the interesting dark side of capitalism. Um, the dark side of capitalism is that the shareholders, which is this is why I want you guys to own stock. The shareholders really benefit when the companies are making money, but the companies end up because their number one goal is to serve the shareholders. They end up doing some things that could be considered unethical. If you look, for example, at workers' wages haven't gone up hardly. If you take away inflation, wages haven't hardly gone up. That's why it's a complete trap for you to train your children to only go work for other people and never invest and stuff like that. They're going to be in big trouble. It's going to be very hard. They're going to be underwater. Um, or maybe maybe you could have still made a profit and not fired that other 1,000 people, but you did it because the shareholders don't just want you to make a profit, they need you to make maximum profit. So because they want you to make maximum profit, basically every expense that isn't absolutely necessary ends up having to go. And that is a bit unfair to workers, who maybe they're not necessarily as efficient as they could be in every way, but just really kind of going through and literally trying to squeeze blood out of the turnip is kind of harsh, right? So that's the imbalance of capitalism, and that's why I can't say I'm a pure capitalist, because I think some of that's completely unnecessary. I think you can make money and still employ people, um, and not threaten their jobs, at the same time. I just think that's kind of unethical to think otherwise. All right, so let me see here. Terrence is asking, are there any automobile or aircraft insurance ETFs worth investing in? And is investing in any world currency a wise choice at this time? Um, there's one automobile ETF called CARS, CARZ. That's the ticker symbol, CARZ. So I looked up one for you, Terrence, and it's the only automobile ETF out there, from what I understand. It's not a bad investment. With the ETFs, if you go into your Robinhood app, it'll tell you what their top holdings are. And I saw some of the holdings. I think one of them was like Toyota and stuff like that. It looked pretty good. So if you want to get an automobile ETF, the CARZ cars might be a good one. Also, you asked about aircraft insurance ETFs. I don't know of any ETFs that are in aircraft insurance. I do know of an ETF that's in insurance, and that's iShares. iShares has an ETF. The ticker symbol is KIE. And again, with these ETFs, they always tell you what companies the ETFs hold. So KIE, that's the ticker symbol for the insurance ETF. All right, so let's see. Next question is from Rena. Rena says, I opened an account in Stash. So far, I have $134 waiting to invest. I am of a military retirement check. I like to invest in the stock market. It is only $514. I'd like to start off small, 200 and work up to $500 per month. Love some suggestions. Yeah, I would suggest not overthinking it, Arena. I would suggest finding a mutual fund that follows the S&P 500. So one good one is the S&P 500, the Spider ETF, SPDR. The Spider ETF tracks the S&P 500. So that means that when the overall market goes up, your money goes up. It's pretty stable. The companies you own are solid companies. It's not overly risky. There is a little bit of risk, but it's not gonna shake you up. It's made money over a long period of time, and I would just consistently put a little bit of money in there every week or every month, whatever cadence is comfortable for you. What I would be cautious about is making sure that you have what is liquidity. A lot of people say cash is trash. I did a whole conversation about that yesterday. That meaning that because inflation is so high, that if you have your money in a place where it's not working for you and not making more money for you, then you're crazy, you're a sucker. What's wrong with you? I don't agree with that completely. Cash may be something that is that you want to have active and working for you, but but really you want liquidity. So the question that you have to ask yourself in the very beginning as an investor is, if something goes wrong and I get a flat tire, my car breaks down, or I need money suddenly for an emergency, do I have liquidity? Liquidity is, do I have something in my life somewhere that I can easily flip and turn into cash within, say, 24 to 48 hours? If you have liquidity, then that's pretty good. So really, this idea that when you get your money that you should invest every single penny, I can't say that that's true. Remember, most expert investors, most fund managers on Wall Street with the Harvard MBAs that manage billions of dollars, they sit on a ton of cash. Sometimes they're sitting on the cash because they just want to be liquid in case they have to do some investor payouts without having to sell assets. Sometimes they sit on cash because they're looking for good opportunities. But also, it's not so much about the cash itself that gives value. It's really the access to cash. So sometimes someone may say, I don't have as much in my savings fund as I'd like, but I do have a line of credit I can tap into in case I have an economic emergency. So I would do my best to remain flexible to some extent, but I do think that being consistent, that's the key. So pick your strategy, stick with it, and maybe grow it a little bit over time. And I'm a big believer in letting your money work for you. That's how people get rich. That's how people get wealth. And also remember that money isn't the only thing you can invest. Most of your investments, pay attention now, most investments you make in your life are not related to money. Most investments that you make in your life have nothing to do with money. You are not defined by how much money is in your damn bank account. Do not do that, please. Because if you, and I will tell you, because if you think that your worth is defined by how much money in your bank account, then you're automatically a white supremacist. Because who has all the money in America? White people do. They have all the money because they stole it from you, right? We know the whole history, right? So you're not going to define me based on how much money I have in the bank. I got money in the bank, right? My net worth is public. People talk about it. They gossip about it all the time. I don't care, right? I got money, but my worth is not defined by how much cash I have, because there's always somebody that's got more money. So what I want you to really understand is that most of your investments you make are going to involve what is called human capital. This is real. This is not me making you feel good or just me telling you something that's going to boost your self-esteem. No, this is actually true. So if it does boost your self-esteem, that's a nice side effect. But these are facts. Human capital means that, if I show up and I don't have any money to invest, but I sit with a group of people who are economically minded, where we're all bringing different resources to the table, I'm adding value to that table. First of all, I'm adding value to my life just by being at that table. Some of you got friends that can't bring a nickel into your house. They can't add any value in any significant way. Those are not the friends you want to spend most of your time with, because that's going to slow you down, right? So just by being at the table, you're adding value to your life, because you're getting money. Part of getting money, one of the first steps is being closer to where the money is. Being around people that know how to go get the money. Being around people that have the energy that's going to lead them to go out and acquire resources, right? So by picking the right table, meaning picking the right friends, picking the right spouse, how I connect with other human beings, relationships, stuff that we don't talk about, but relationships, very important. We talked about that. I'm not going to go into that again. Second of all, my human capital is valuable because then I'm bringing my resources to the table. So let's say I have no money in the bank, but I sit down with a bunch of other wealth builders and I say, okay, how are we going to make this money? And somebody says, well, I've got the capital to invest, but I don't have the time to run the business. Well, you might say, well, I got time. I don't have a job anymore, so I got plenty of time. I can run the business. So let me have some of the cash that we make, and I'll give you my human capital. Or if somebody says, I have a product that's really great, I just don't know who's going to buy it. Well, you might say, well, I got friends. I know people who need CMOS. I can get you access to a market. Well, you're adding value, right? Your relationships, your network is adding real economic value to the company that can be converted into cash. Do you follow what I'm saying? So when you sit down in your family meetings, and this is one of the things that actually we'll cover in some of our events. So if you come to one of our seminars, now the one on the 15th with Alicia is more about wealth and family and relationships and networking. It's more social, more laid back, but also there is some deep thinking. You guys know I'm always a thinker. But when we go to the Essence Music Fest in July 1st to the 3rd, one of the exercises I'm going to have you guys do is show you how to form an economy right there in your house, how to create an economy right there in your church, to create an economy right there in your space. And we're going to do it. We're actually literally going to go from nothingness to something that actually makes money in that weekend. Like, that will be literally the objective. That will be the transformation. You'll walk out of there saying, oh, now I know exactly what to do in order to build wealth or whatever it is, right? Because at the end of the day, when you're coming together with other people, that is automatically making you wealthier. When you are adding value in ways that are non-financial, that is how you add the most value. And the biggest economic trap out there, in my view, is this idea that if you don't have any money, you have nothing to offer. You're not bringing anything to the table if you're not bringing cash. That's silly. That's nonsense. Remember when you came over as slaves, you didn't have no money in your pocket. The slaves were half naked. They didn't have any cash in their pocket, but they were a multi-billion, eventually multi-trillion-dollar commodity. Well, how is that? Well, because they had labor. They bought skill. They bought culture. You bought so many things that white folks have made trillions of dollars from. So you got to understand your value in order for you to understand how you can make that money for yourself. Okay, so let me keep going. Let me go to your next question. Dorothy Van Buren, how you doing, Dorothy? If unionization efforts at Amazon are successful, how will this impact Amazon's bottom line and stock price? I think the unions would probably cause Amazon stock to go down in value. I don't think Amazon wants unions. I looked up the update on union efforts, and I saw that in Staten Island they voted against the union. Let's see here. They said employees at Amazon warehouse in Staten Island voted to reject unionizing. The tally was 380 votes in favor of joining the union and 618 opposed. The decision comes just a month after a neighboring Amazon warehouse voted in favor of the company's first U.S. union. So that's really, really interesting. Let's see. So I think that Amazon. Remember, the managers don't work for the employees. The managers of the company work for the shareholders. The goal of the company's management is singular. It's to maximize shareholder wealth. Milton Friedman in the 1970s came up with this concept, and I completely disagree. And so because they work for the shareholders, they want to maximize profit, and they know that one of the things that unions allow you to do is it allows workers to aggregate their collective economic power. They call it collective bargaining. We're bargaining as a group. When you come together as a group under a unified umbrella, Black people, you always gain more power. So, in order to keep workers from having the power to command the wages that they deserve, companies step out and say, oh, you don't want a union. Unions are whack. Unions are for suckers. Unions are bad. And here's the deal. Here's the reality. Sometimes unions are bad. The Teamsters was run partly by the mafia. They used to do horrible things. And so the corruption was real. There were times where workers didn't benefit from the unions. I don't even know if Black people, I mean, think about it. There's a lot. I talked to a Black man, Professor James Small the other day, a brilliant man that everybody should know about, by the way. And he talked about how his father came from the South and went to New York City and was so good at building houses. He could build houses with his bare hands. And he got to New York City, and because of unions and licenses and professional protection that primarily benefited white people, his father was not allowed to do the work that he was trained to do. So if you want me to tell you that unions are always good, I don't think they're always good. I think a good union is good. I think a bad union is bad. So this Amazon fight is interesting. I do see the stock price dropping a little bit if they did pass the unionization, but I do think overall it will be better for the country because we need unions to go against the fact that workers' wages have continuously dropped because management has manipulated divide and conquer in order to keep wages low. That's not fair. The only time America was great, when they talk about making America great again, the only time America was great from an economic equality standpoint, Professor Robert Reich, former labor secretary, made this point, and I agree with him 100%. He said the only time they were somewhat great, at least as a country as a whole, right, was in the 1960s, where the wage gap between company CEOs and company workers was lower, much lower than it is right now. The gap has gotten insanely high now. Like it's ridiculous. The CEOs are just killing it. I think the CEO of Amazon, Jassy, I think he's going to get $250 million payout this year, which is kind of crazy, right? So the gaps have gotten enormous. Workers' wages have remained flat. When inflation creeps along, that makes it even more difficult. So this is what you'd want to do with your kids. So when we were talking earlier about things like the financial flashcards, the reason I bring this stuff and offer this stuff to you guys is because you got to make sure your kids understand how to get on the right bus, right? When you look at economic vehicles, investment vehicles, that's the term they use. You've got some vehicles that will get you down the road very efficiently and will take you a very long way. But you got some vehicles that maybe they look fancy, maybe that's the first car they're trying to sell you on the lot, but these vehicles are duds. They have flat tires, they don't have an engine inside them. You will be sitting on the side of the road and you won't go very fast and you won't go very far. And so economically speaking, that fill out a job application, that vehicle is dead. It's a dud. It's not going to work. It doesn't mean they can't work for other people, but they have to have another vehicle that's actually going to get them down the road. The vehicles that get people down the road lie in the three key areas. If you want to make your children rich, teach them three things. One, how to own stock. Every child should own stock on the day that they're born. Every child in our community, in the B1 community, should have shares of stock from the time they're born. Those shares of stock should not be sold. They should be consistently added to over time. You should set it on autopilot. Your child should have over $100,000 in liquid wealth by the time they're 25 years old. If you buy your child $5 a day worth of stock, or $35 a week, or about $140 a month worth of stock, which is less than most people pay on their car note, which is less than the cost of Popeye's chicken, $5 a day. You can't buy Popeye's chicken value meal. Your child would have over $100,000 liquid when they're in their 20s. That right there will put your child ahead of 90% of all other children: white, black, green, yellow, Jewish, Arab, Chinese, whatever. Number two, every child should know how to buy a home by the time they're 12. They should understand that real estate is not to be rented. It is eventually to be owned. They should own real estate as soon as possible, because when inflation hits, the biggest form of inflation in America is not the inflation on the price of bread. The biggest inflation in America is not the inflation on a gallon of gas. The biggest inflation in America is asset inflation. Asset inflation means that when they lower interest rates and increase bond buying and increase the money supply, the number one area where inflation is highest is in stocks and real estate. Stock prices shoot through the roof. Real estate shoots through the roof. That's why people in Atlanta can't buy houses anymore, because they overheated the market. So by having your child as an owner, positioned as an owner of real estate, then guess what? When the wealth of America goes up, their wealth is going up too. It's like sitting on top of a balloon, and the balloon is rising, and I'm rising not because I'm working harder than you, not because I'm taller than you, not because I did more work than you did. I'm rising because I'm sitting on a balloon and you're sitting on the ground. So put your child on top of the balloon, which means if they own the real estate, then when the real estate values go up, their wealth naturally goes up. Number three, every black child should learn how to start a business by the age of 12. Nobody gets fired more than black people. Nobody's more unemployed than black people. Nobody feels the pain of economic despair or microaggressions or racial stress on the job than black people. So you don't love your child by dropping them in the pits of hell, by having them go through the fire of racism every single day where they're trapped in a situation that they can't get out of. What you do is you make sure that they have the skill to do a side hustle, start a business, or make enough money in order for them to be free from the corporate plantation. For most people in this country, I figured this out. Most people, the difference between slavery and freedom is usually no more than maybe $4,000 a month. $4,000 a month. It's not a tiny amount of money, but it's not a ton of money either. So here's the deal. If your child knows how to go out and find a way to bring in $4,000 to $5,000 a month, they never have to work for anybody for the rest of their life. They don't have to go out and become a millionaire. They don't have to run a major corporation. It might be a matter of them realizing that they can sell T-shirts and sea moss and multivitamins, or have a podcast, or whatever the hell that they do that gives them that $4,000 a month, so they can stay at home and truly live their life and not have to sell their lives to a corporation. Do you follow what I'm saying? So if you love your kids, I hope you will consider doing these things. This is a very simple recipe, but remember, the thing about it is that you have to get ready. You have to make sure you stay ready so you don't have to get ready. You don't react to the problem. You should be proactive. You solve the problem in advance. Wars are won before the war actually begins. I tell my daughter every day, preparation is the key to success. If you don't prepare, then you cannot expect to succeed. And I need you to look around in the society around you and say, are people really collectively preparing, or are they just simply reacting to what somebody else just did to them because they were not prepared? So get off that grid, pick a different vehicle, make a different set of choices. That will get you where you want to get to. All right, so let me dig back in. All right, so if you have questions, you want to put them in the Q&A. Put them in the Q&A. I answer. Is that 4K after month after expenses? You know what, Orpheus Jones? When I quit my job, it could have been 4K before expenses, and I still could. You know what I did when I quit my job? I'll tell you the truth. I looked and I said, okay, this is how much money I make, and I'd like to keep that, but not having to work around these people, I'm willing to take a pay cut if that means I get to stay home and sleep in and do what I want and hang out with my brother or go call my mama or whatever, right? So I didn't need to make my salary when I quit my job. I just added up. I said, what are all my expenses? And I put them in order of priority. So at the top, I had, okay, mortgage is number one because I got to have a place to live. Number two is car note because I need a vehicle. Number three is food, right? So I said, wait a minute, if I have my car and a place to live and food and maybe Wi-Fi, oh, I can survive the storm. So if I have a bad month where money isn't coming in good, I'm okay. I'll just stay in the house and watch Netflix, and work, on my laptop, right? So that was my logic, and all those expenses combined was less than $2,000 a month. So theoretically, it was only about $2,000 a month I needed to not have to go to work every day, right? And what I found was that when I was happy, when I was like really happy, like being at home and being away from the people that I didn't want to be around, that was worth gold to me. Like I didn't care like that I wasn't making as much money as I wanted to make. Because I wasn't trying to go shop at the mall and whatever. You follow what I'm saying? I just wanted to survive. And one of the strongholds that America has over you as Black people is they have you afraid that without their help, you cannot survive. And I'm just here to tell you that that is simply not true. You can survive, but you must have a plan. If you do not have a plan, it is very difficult to accomplish anything without a plan. You can't win a football game without a plan. You can't raise a child without a plan. You can't lose weight without a plan. You got to have a plan. My wife gave a whole conversation. Actually, when she spoke at the One Africa Unity Summit in Detroit, she literally did a lecture called Why Kingdoms Crumble. And she talked about the fact that she's a descendant of King Ramses III. And she looked up the history of King Ramses III. You're going to find this is fascinating. So King Ramses, if you know anything about that ancient history, he was fighting a lot of wars. He was fighting a lot of enemies externally. He was always at battle with somebody. And one thing he didn't do was he didn't realize that he was losing a battle right inside his house. So when they dug up his body to find out how he died, they found that his throat had been cut from here all the way down his back. And they somehow they knew that the person that did it was his own wife, who conspired with her son to kill him, right? So he spent all his time fighting all these battles externally, and he wasn't fighting the battles at home, right? So this really spoke to me in terms of, number one, the importance of things like family and community and watching what's around you. In your goal to become successful, but then also she talked about having a plan in general for your family. That in order for your family to succeed, you have to have respect. I think she mentioned respect, trust, and a plan. So my question for you at the end of the day is, what is your plan? Or if you have friends or someone you're thinking about dating, ask them about their plan. And if they don't have a plan, just know that should be a massive red flag in terms of whether or not they're actually going to succeed. Most people don't become successful by accident. It just doesn't typically happen that way. Okay, so anyway, so some of you are asking again about the flashcards. The financial flashcards for children actually can be found at financialflashcards.com. We have two types of flashcards if you're interested in taking a look. We have the flashcards that cover things in the stock market like capital and annuities and stuff like that, and that's here, taxes and equity and stuff. And then we also have flashcards for entrepreneurship. So if you want to go take a look, just go to financialflashcards.com. That's financialflashcards.com. Okay, so let me grab a couple more of your questions here. All right, Liz, how do you calculate your ROI on savings of a bond with an interest rate of 9.62% for 6 months, assuming you cashed out at that time? Okay, so how do you calculate your ROI? Okay, so you bought a bond that has a 9.62% yield, like I guess payout. The coupon is 9.62%. Okay, so what you would do is basically you would take that money that you invested and you would multiply it by 1 plus 0.0962, right? That gives you the amount of interest you would earn in a year. But since you sold out in 6 months or sold the bond in 6 months, you would actually take that amount of interest, and it would be cut in half because it's half a year. The other factor that you have to consider when you talk about bonds is if the bond is publicly traded, the price of the bond can go up and down. So when they talk about bond yields changing, what they're really saying is that bond prices are changing. So when a bond's price goes down, its yield is going up, meaning that you can invest smaller amounts of money and get the same return, which increases your rate of return, right? So ultimately, to not overcomplicate the issue, I would say that in general, that it's just like calculating interest. So if the bond pays 9.6%, then you would basically take 9.6% of the amount you invest. That's going to be your interest for the year. If it's over 6 months, then you would cut that in half. Okay. And chances are, if the yield is that high or if the interest rate is that high, it's probably a super high risk bond. So you got to just remember that, that at a rate that's that high, there's a chance you may not get your money back. And also the interesting thing is, like, you think about things like crypto staking. Crypto staking, which is kind of the same way, like you're loaning your crypto and you're getting, an ROI on that. Crypto thing. Let me see. She's not able to cash after 6 months. It has to. Okay. Sorry, Nemesis. I see your comment. I'm reading here. Crypto staking is interesting because you get a higher yield, and everybody says, "Oh, I should just stake my crypto. Why would I put my money in a savings account when I could just stake my crypto?" Well, just remember, in economics, there's that saying, there's no such thing as a free lunch. So what that means is that in this particular case, if you're getting this higher yield on your crypto staking, you got to understand there's probably some extra risk you're taking on that you're not thinking about. So the extra risk being taken when you stake crypto as opposed to putting your money in a savings account is that crypto isn't really, government sanctioned currency. Like, there's no guarantee that your crypto is going to maintain its value. So especially if you talk about extreme cryptos like Dogecoin and stuff like that, go look at Dogecoin. Look at the rate of return on Dogecoin over the last year. It's been horrible. Dogecoin hasn't really been in the conversation that much lately because Dogecoin's been getting killed, right? So and I saw a lot of people buy Dogecoin thinking, well, if Dogecoin goes up to $1, look at how much money I'm going to make. But it hasn't happened, and a lot of people don't think it ever will. In fact, the days of putting money into Dogecoin and thinking that that's going to be your big payoff, those days are kind of done, because what happened was that you were investing in the middle of an absolute complete economic frenzy where money was raining out of the sky. In most economies, money is not raining out of the sky. Okay. Your thoughts on Redbox? You know what, Steven? I don't know much about Redbox. If you put it in, just log in at theblackstockmarketprogram.com and leave the question for me for next week, and I'll look into it for next week. So that's the benefit of being in the class. If you give me a stock or a situation you want me to research, I'll do that for you. So just log in, theblackstockmarketprogram.com, and just leave the question there. All right, and by the way, I put a list of stocks that I like for this week also. So again, log in, theblackstockmarketprogram.com. There's a list of stocks every week. On every Sunday, I put a list of what I call what Dr. Boyce is buying. So you can go there and take a look at the stocks that I like for this week. These are stocks that I either bought for myself or stocks I would buy. Sometimes you just keep buying. Like, I go grocery shopping every week for stocks. I love to buy stocks. I don't buy clothes. I don't really buy shoes. I take a few trips with my wife, but usually it's stuff for business. So stock and investing is kind of the fun thing that I do. I'm like a shopaholic when it comes to stocks. So what I do is, as a benefit to being in the class, is I list every week, every Sunday, I give you guys a list of my top 5 stocks that I like. And most of those stocks I'm typically buying for myself. So I would never recommend something for you that I would not do for my own family. So that means that if something does go wrong and it goes down, we're both hurting at the same time. Because I know some of the stocks, they go off and they do great, and some of them haven't done so great. But the other thing to remember too when you talk about investing is you got to think about time horizon, right? A lot of people think that a long-term investment is a year or 9 months. That's not long-term. That's very, very short term. In fact, the definition financially of a short-term asset is anything less than a year in maturity. So, so don't think that because you held onto a stock for 9 months or 18 months that's a long-term investment. No, long-term is at least 5 years, but really it's like closer to 10. Warren Buffett says that if you're not ready to hold the stock for 10 years, you shouldn't even hold it for 10 minutes. But he's old school, but it's worked. He's worth a lot of money. He did better than the rest of the market this year. But at the same time, again, Buffett gets some things wrong. Like Charlie Munger, his partner, says Bitcoin is stupid. It's stupid and it's evil. Not that I didn't like it, right? But Charlie Munger, Warren Buffett's partner, he's 98 years old, and I kind of feel like if a 98-year-old is still able to recognize his relatives and still able to have coherent conversations, that's pretty awesome. I respect that, right? So you kind of let it go. There was this old lady, not old lady. I'm not making fun of anybody who is either a senior citizen or have senior citizens that we love because we all got our grandmas and stuff. But there was this lady that I saw on a TV news story, and she was having her 100th birthday, or maybe it was her 110th or something like that. And they said, so Grandma, how does it feel to have your 100th birthday? And she said, I'm not going to say the actual word, but it starts with a D and it's connected to a man's body. So let's use the word pics. She said, turning 100 is great because you get more pics. And they were like, ha ha, Grandma, this is live news, right? And then they said, oh, okay, Grandma, okay, that was funny, Grandma. Now, how do you really feel? She said, well, 100 years means 100 pigs. And so it's like, so with Charlie Munger, my point is to say that I would take it with a big grain of salt. I wouldn't overreact to it, but he thinks Bitcoin is stupid and evil. I don't agree. I think also his statement that Bitcoin is evil is built on kind of this old school commitment to America, no matter what. So he came up in an era where the government did no wrong, where you supported America no matter what, and he made an accurate point that Bitcoin does challenge America's economic supremacy. It also challenges the economic supremacy of the Federal Reserve System. So I didn't like his comment. I thought it was a little bit too much. Warren Buffett tried to distance himself from it, but also it reveals kind of a shortcoming of the Buffett-Munger investing strategy. Remember, Buffett and Munger missed out completely on the entire boom of 2020. Buffett himself admitted that. He said, I missed out on all the money that was made in 2020, and a lot of you made most of your money in 2020. Buffett also missed out on the tech boom. Buffett missed out on all the money people were making from crypto. So don't think that his approach is the be-all, end-all. There's always a different perspective. And the reason you want to be financially literate and kind of understand how the pros and cons of different styles is because you need to find the right style that works for you. I'm wearing a blue shirt. I can't see, or purple, or I'm not good with color, dark blue, or navy blue. So if I were to sit here and say, well, I'm Dr. Boyce, and everybody likes, and Dr. Boyce is, I think Dr. Boyce is pretty smart, and I believe everybody here should like dark blue shirts like me. That would be silly, right? Everybody should want short sleeves because I wear short sleeves, and that's what everybody needs to do. That would be silly too, right? Some of you have different preferences, so investing is exactly the same way, to be honest with you. And now I can tell you the benefit of short sleeves versus long sleeves. That would be accurate. Or I could say, the navy blue shirt works because it works good against my skin tone, and you should hear all of that. But if you are doing exactly what somebody else is doing, that's a problem because you're not really doing what works for you. Okay, so just keep that in mind. All right, so let me keep going. Hello, Dr. Boyce. I should have apprehension about signing up for Robinhood due to the fallout that happened a while back, or just treat like Stash or Acorn. You know what, Joe? Joe, I wouldn't get too caught up in the Robinhood controversy. One of the things I would say, though, in terms of where you keep your stocks and all that, is I would at least try to spread out amongst different apps. Like I wouldn't put all my money on the Robinhood app. I don't, but I have a Robinhood account. I just don't trust any one company having all my resources. If something goes wrong or the grid goes off or they get hacked, you lose everything. So part of protecting your wealth means really protecting your wealth. It's not just about trust, in wills and estate plans and all that. It's really about things like not putting all your money in one place, or diversification, spreading your money out to different kinds of investments. You get some real estate, you get some stocks, you get some, other types of assets. Mix it up a little bit. Okay, so do two more questions, then we're gonna be done. And by the way, that don't forget that event in Chicago. If you guys want to come out to meet me and Dr. Alicia that day, we're gonna have a great event. It's gonna be about 3-4 hours. It's gonna be social and fun and drinks, but we're also going to do some deep dive conversations as well on wealth, and particularly wealth and relationships, etc. So, but it's adults only. So if you want to come out, just go to boycewatkins.com. And we also have other events in other cities. So you can just go to my website and you can see what we have going on. All right. So King May says, are options still good? A good thing to do given all the uncertainty. Options are typically good no matter what. King May, that I think options are great, because I think of options like the way you think about seasoning on food. The salt, pepper, the everything in between, cinnamon and all that. The seasoning really just adds that extra flavor. It makes it just right. Right. If I just give you a piece of chicken with no seasoning, you're gonna be fed, but that's it. Right. But if I spice it up and add some little bit of this, some paprika and whatever, right, then you'll be like, this is the best chicken ever. But you got to know how to cook. You got to know which seasonings to use, right? Somebody dumps a bunch of sugar and cinnamon on your chicken, it's not going to taste right. So options are, in my view, something that works extremely well if you use them correctly, right? Options can calibrate your risk profile. What that means is that options can either add more risk if you want to take on some more risk. They can take away some risk. They can allow you to get in the game a little bit, dip your toe in without dipping your whole body in, right? Or they can allow you to just get cash flow. I use options every week to actually get my cash flow. I get my paycheck, so to speak, off my options portfolio, because it allows me to financially benefit from my stocks without actually having to sell anything, right? So I would encourage you to consider looking into options. If you want to take a look at my options masterclass, just go to stockoptionsmasterclass.com. I put together a whole weekend intensive where we did a whole deep dive on options. And I recorded the whole thing. So feel free to go take a look at that. It's stockoptionsmasterclass.com. All right, so Picola, can you speak on Kathy Wood? The last question. Can you speak on Kathy Wood and her ARK investments? Is this still a good investment? I bought some of her ARK stocks. Yeah, I think Kathy Wood, it's interesting. Here's the thing with Kathy Wood that's fascinating. So Kathy Wood is a lady who believes in the future. She is a good long-term investor. She's very smart. She's 70 years old. She's extremely experienced. She was very popular during the pandemic because a lot of the companies that she bought were doing extremely well. I am a fan of Kathy Wood. I'm a big fan of Kathy Wood. But a lot of people question Kathy because a lot of her stocks that she bought, whether it was Teladoc and stuff like that, they all crashed. They were the first ones to crash. They crashed the hardest. It's like it's like the day after the crack binge. It's a very very bad day. It's fun to be the crackhead when on Tuesday, but it's not fun on Wednesday when you got to pay the bills and deal with reality again. So basically, this hangover of the boom of 2020 and 2021 has hit Kathy Wood's portfolio very, very hard. What's interesting is that a lot of people still believe in her, and they're very smart for doing so, because what Kathy Wood is doing is she's sticking to her guns. Kathy Wood is basically saying, these are not the companies that are going to do well in the next year. These are companies that are going to do well in the next decade. So she's investing long-term in technologies that are going to be transformative. They're going to open up entire wormholes, economic wormholes, in terms of new industries that you don't even know about right now, in the jobs that you don't even know will exist in a decade. Kathy Wood is investing in those companies that are going to spawn those new jobs and new opportunities. So I'm a big fan of Kathy Wood. And what's interesting is that she got the most respect and attention in 2020 when her stocks were flying high. But now is the time where I respect her the most. I respect her the most because I don't just define you based on what you do when things are good. I look at how consistent you are when times get tough. When it's tough for you to maintain your position, are you able to still hold your spot? She has held her spot like a rock. And the best part is that a lot of the companies that she believes in the most are as cheap as they have been in years. So given that Kathy Wood is a consistent investor in the future, and given that these companies that she's been invested in are trading at rock bottom prices, Kathy Wood is doing exactly what I would do if I were Kathy Wood, which is going in and she's scooping up all these stocks like crazy. She is basically doing what they did when they gentrified black neighborhoods. Kenny Gamble in Philadelphia, who is a black man I love and admire tremendously, went to Philadelphia, to the poorest, most raggedy part of the city that he grew up in, the place that was full of pimps and prostitutes and dope addicts and violence, and he bought every single house he can afford. He was buying the houses dirt cheap for $5,000 a piece or less and buying vacant lots, bought everything. Now, years later, that is one of the most valuable pieces of real estate in all of Philadelphia. It is worth millions. He owns entire city blocks in prime real estate down in Philadelphia because he had a long-term perspective, because he had patience, because he had vision, because he had what many of you have, which is a plan. So I want to ask you this, and this is the last point I'll make before we bounce out of here. And I'll see you guys next week for class. What is your plan? What is your plan? Everything's cheap. Everything is cheap right now compared to what it's going to cost 15, 20 years from now. I guarantee you that. Real estate is dirt cheap compared to what it's going to cost in the year 2040. Stocks are super cheap compared to what they're going to cost in 2035. So what is your plan? What's your move? Your grandkids are waiting for you to make a move. Or are you going to sit there and do nothing? It's up to you. All right. So thank you all for listening. It was really great talking to you. Just a reminder, don't forget those financial flashcards are in stock. We'll probably sell out pretty quickly. We usually do. But we'll get some more, hopefully. And hopefully we'll find a good supplier. But anyway, if you want to put your kid ahead by working with them with the flashcards, just go to financialflashcards.com, financialflashcards.com. You can use the discount code Black Power as one word, Black Power, and get 20% off anything in the store. We also have entrepreneurship flashcards, so feel free to go take a look, and I hope that this helps you. So I love you guys, and don't forget, you can, if you want to see the stock picks for this week, just log in at theblackstockmarketprogram.com. If you want to leave me a question for next week, just again log in theblackstockmarketprogram.com. If you have any issues or any questions at all about anything in the class, just email our support team. Our support team is at support@theblackbusinessschool.com. They're really good. They're right there waiting for you. They want to support you. They want to make you happy. So feel free to email the support team if you have any questions, or if the Black Business School can serve you in any other way. Also, last but not least, voicewatkins.com. If you click on events, you can find out about the event my wife and I are going to have in Chicago on the 15th. But we're also going to have other events in other cities throughout the year, all the way up to Charlotte, which is where the All Black National Convention is going to be held at the end of October. So feel free to go to voicewatkins.com and click on events. All right. So please take care. Have a great day. Love you guys, and I'll see you soon. Bye-bye. Should I invest in beesnuts.com? That's hilarious. Yeah, why not? All right. So have a good day, everybody. I'll talk to you soon. Bye-bye. Very good. That's funny, the MG. And I read your comment because you made a donation to the platform. So I appreciate you, brother. All right. Have a good day, everybody. I'll see you soon. Bye-bye.